to Phillip Futures Market Watch. I'm Joyce Liu, Investment Analyst with Phillip Futures. Last week, European Central Bank, the ECB, announced further rate cuts. The benchmark interest rate, professionally termed the main refinancing operations rate, was reduced by 10 basis points to a historical low of 0.15%, shown on the chart, the middle one. The marginal lending facility rate was decreased by 35 basis points to 0.4%, and the deposit facility rate, this one, was decreased by 10 basis points to negative 0.1%. This is the first time in Eurozone history a negative interest rate was introduced. All changes took effect from Wednesday this week, 11th June. The question is, how will these changes affect investors? First, we have to understand the rationale for lowering these interest rates. Eurozone is in a similar situation as the US a couple of years ago. Despite extremely low interest rates, businesses are not borrowing from the commercial banks, possibly because interest burden is still too high. On the other hand, commercial banks are also not lending sufficiently to businesses and consumers, possibly to clean up their own balance sheets and to meet more stringent regulatory requirements. Bank lending is important because it generates long-term consumer spending and aids businesses in investments and expansion plans, which in turn generates income and employment. So to encourage bank lending to generate credit flow, the benchmark refinancing operations rate was cut to signal all lending institutions to lower their interest rates accordingly. Drastically lowering the marginal lending facility rate allows banks to borrow cheaply from the central bank to meet short-term needs and regulatory obligations. The negative deposit rate completely removes all incentives for commercial banks to deposit their excess cash with the central bank and encourage them to lend out the spare cash instead. For investors, the reduction in main refinancing operations rate is poised to make the biggest impact. In the immediate short term, the euro is most likely to depreciate against the US dollar. Post the reduction in rates, the record low main refinancing operations rate, being lower than the US federal funds rate, gives new opportunity for large-scale carry trade. Carry trade is a strategy when an investor borrows cheaply in one currency, converts it into another currency, and purchases a higher-yielding instrument in that currency. With the ECB benchmark interest rates now 10 basis points lower than the Federal Reserve benchmark interest rate, the scene is set for the euro-dollar carry trade to take place. The US economy is at least half a stage ahead of the Eurozone in recovery, and with a slight bias towards monetary hawkishness, the relative strength of US bond yields is expected to be more striking in the next 2 quarters to come. Quantitatively, the sovereign risks of US and Eurozone are also comparable. If indeed euro-dollar carry trade is carried out in large scale, the selling of euro and buying of US dollar will accelerate the depreciation of euro to the dollar. A 4% decline from current levels to 1.30 may be within sight in the next quarter. In the mid to long term, if optimistically the combination of lower main refinancing operations rate, lower marginal lending facility rate, and negative deposit rates indeed propel domestic consumer and business borrowings, then the effect of improving economics in the Eurozone is likely to reflect most obviously in the stock market. We estimate that the upside potential for Europe's STOXX50, now around 3,300, is conservatively about 10% for investment horizon of 3 quarters to a year. Phillip Futures offers trading in Euro-Dollar FX, Euro STOXX50 Index Futures, and futures of Treasury bills, Treasury bonds, Treasury notes, and Euro bonds. For more details on FX and futures trading and information on the risks and returns of investment, please approach any representative from Phillip Futures for further discussion. Thank you. Please subscribe to our PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.